And in business news, the Monetary Policy Committee of the Central Bank of Nigeria has voted to retain the key policy rate at 27%, maintaining other major parameters while adjusting the standing facilities corridor. At its 303rd meeting and the last for the year, the committee highlighted sustained disinflation, stronger bank recapitalization outcomes, and improved external reserves. Olayemi reports.
It's the Central Bank of Nigeria's latest briefing on the outcomes of the Monetary Policy Committee meeting, the 303rd in its series and the final session for 2025. CBN Governor Olayemi Cardoso says the MPC reached a majority decision to maintain the monetary policy rate at 27%. Other key benchmarks were also retained. Cash reserve ratio remains 45% for commercial banks, 16% for merchant banks, and 75% on non-TSA public sector deposits. The liquidity ratio stays at 30%. The committee noted that the policy stance reflects a commitment to sustaining disinflation, supported by a stable exchange rate, PMS price stability, and ongoing monetary policy tightening.
Maintaining the current stance of policy amidst lingering global uncertainties would allow the effects of previous policy rate hikes to sufficiently transmit to the real economy and further reduce prices.
Mr. Cardoso confirmed that 16 banks have now met recapitalization requirements, adding that coordinated policy actions remain critical in strengthening the financial system. He also highlighted the 9.19% growth in external reserves, even as global trade tensions and geopolitical risk continue to pressure global output.
Headwinds to the outlook include the potential for increasing protectionism, geo-economic fragmentation, and likely resurgence of trade tensions between the U.S. and its major trading partners.
When asked about the removal of Nigeria from the grey list and when Nigerians will begin to feel the impact of disinflation, the CBN governor is positive, insisting that the reforms are even gaining confidence on the international community. Yet, as always, the expectation is that these reforms translate into real relief as the CBN continues to watch closely on the markets ahead of 2026. Olayemi, TVC News, Abuja.
Meanwhile, the Chartered Institute of Tax